Hey everyone, welcome to CoveredCall ETF Investing, your central hub for deep CoveredCall ETF data. In today's video, we're going to be looking at the CoveredCall ETF ALLSTAR tracker, a Google Sheet I've created to specifically look at something that we rarely talk about on this channel, which are BMO funds. Their yields do not cross that 10% threshold that I typically like to talk about, but no better opportunity than the present to do just that. So if you like the format of how the Google Sheet is presented and all the info on there, then you can pick that up on my Patreon, which will be in the description below or the very first comment that you see a link to that spot. So with that being said, let's get into the video. So now we're going to look more specifically. It's something I don't talk a lot about on the channel, which is BMO ETFs. I want to do a look at what kind of investor might want to invest in BMO ETFs, and more specifically their suite of CoveredCall ETFs. Now, I don't talk about this much because, as you all know, I am very focused on talking about things that are kind of 10% oriented. It's not to say that these can't serve your needs. It's just what this channel focuses on is usually 10% plus. And as far as the things I invest in personally, 10% is the mark. Now, BMO is like the king when it comes to assets under management. They got some massive AUMs, a couple of billion-dollar funds, which you can see here. How many they got? 1, 2, 3, 4. Which maybe the other fund managers might have one. Like I want to say Harvest, I think, has one. I don't know if maybe Evolve has one as well, but then it's like that's it. So BMO has more funds that have more than $1 billion of assets under management than any other CoveredCall ETF fund manager in Canada. Now, we're not talking about total, like all assets under management, but the number of funds that have an AUM of $1 billion plus. So these guys have been in the game for a while. I would say they are one of the forerunners in this space. Now, like many of us, I think would like with BMOs to offer some leverage components. For instance, it would be nice if ZWQT, which is more of a global centric kind of CoveredCall fund, it invests in emerging markets, developed markets, the Canadian stock market and the American stock market as well, but it has just a low yield of 6.28%. And that's kind of the theme across a lot of the BMO products, is that they are smaller yields. But even though they have smaller yields, what is their performance like over the last few months? But before we get to that, let's actually just look at what are the highest yields. So it looks like it's U.S. banks, energy, no surprise there, or even utilities for that matter. Typically, those are the higher yielders. Anyway, so as we move along here, we'll go over to say how these funds have done. Let's just do 6 months. If we're looking at opportunities, which of these funds maybe has the best opportunities? Look at that; they're all up. So less coverage. They're not as aggressive as far as their CoveredCall writing is concerned, and as far as a suite of funds, they're probably the only fund manager that has so far in the last 6 months has all of their funds performing in the positive. Now, this is just price performance. Let's not forget that total return is going to be coming in July to the tracker, along with a live tracker as well in regards to all of this. Okay, so let us also scope out maybe the last trading week of May. How did that go? Why is it all red? Yeah, this week has been brutal, and every fund, every stock has just been beat up across across every index at the tail end of May here. And then as we kind of head down, everything has 65 basis points, MERs all within, basically 0.72. So total costs of managing the fund is right here. They all have about 50% portfolio coverage, meaning the other 50% can just do whatever the market is doing. All of it is out of the money, and it's probably like well out of the money. At least that's my speculation. So which allows for more natural price growth as well. Dividend streaks, let's see what is the highest dividend streak. ZWA at 49 months, ZWP at 36 months, ZWT at 22 months, and it's got some other ones here kind of at the bottom. So at least every fund has been growing, or at least been maintaining some form of dividend streak for the most part over the past year or so. And then as far as monthly performance is concerned, they're all stable. BMO tries to be stable with their distributions as best they can be. Lifetime change, you'll probably see a higher, would you look at that? Anyway, so we got maybe half of them at least stable, if not growing. The ones that have declined, let's see, ZWC, that's been around for a little while. Let's check that out. When was the inception day? I'll try to include. Okay, so even though ZWC, so 7 years old, and it hasn't been able to get some momentum around lifetime growth with their distributions. ZWB.U, same thing with them. ZWS, which is a U.S. high dividend cover call. Again, very diversified. So I don't understand why a fund like that. Oh, but you know what? ZW, yeah, it's 6 years old, so you would think that a fund like this could maintain some level of distribution stability and still grow a little bit over the time. So, unfortunately, it is a little disappointing to see that in that regard with these suite of diversified funds that haven't been able to be stable and also increase over time. Europe high dividend, that's more maybe, I'm not going to say niche, but it kind of leans more niche. We don't see a lot of European style funds. So there's one here. Evolve has one with EBNK focusing on banks. And I think you got European high yield. European was this high yield covered call ETF, and then you got the European high dividend. Yeah, but it's just hedged. Yeah, that's the only difference. This one's just hedged, and this one isn't. And then you got utilities. Oh, poor utilities, getting just beat up hard. When did that come out? 13 years ago. Man, how has that not been able to maintain? Like, good to see these other ones. Let's I give a little bit of critique, but we'll give some praise to, like, look at ZWA, the Dow Jones. I think that's the only Dow Jones cover call here on the Canadian market that, tracks the Dow Jones Industrial, able to grow 66% since 2011. So whatever that is, that's an average of, I don't know, I'm going to go on 11. What is that, 6-7% a year? Something like that. So big AUMs for these funds. And because they got big AUMs, because just look at how big these funds are. There's only a couple that are fairly small with these two. But with having their suite of products, I don't know if BMO is in such a hurry to change things up. I don't, do they rock the boat? They got an incredible AUMs here. So I think they know what works for them, and probably not necessarily as hungry to maybe change, innovate, do whatever they got to do. I think they're maybe just, and of course, because they're one of the big six banks, they'll probably take things a little bit slower, don't want to change things up too much. So I shouldn't be surprised there. They probably know what they are. Of course they do. And they are for a very specific kind of investor. And it's the kind of investor that just wants, a little bit of extra income, maybe doesn't want to go too crazy, or at least might think that, 10% plus is pretty crazy. But as we see, and as you follow the channel, that is just simply not the case. Now let's go over to check out the AUM of BMO, the BMO funds. So let's look at some of the AUM changes and look at the overall health of those big giant AUMs that we've been seeing. So we're going to filter and look at let's look at the highest. Which ones are kind of growing the most right now? Well, percentage-wise, naturally speaking, the newer, smaller funds are growing the most. So ZWK year-to-date, 80% change. But the billion-dollar one's not growing as much. Let's take ZW, you know what, I don't know. Let's take ZWB, for example. How's that doing? It's their biggest fund, and it's basically growing at a snail's pace with 0.05% over the course of this year. And we can see that its AUM doesn't really change all that much. It just hugs that band of, just 3% roughly in either direction. So the bigger funds, even let's take ZWU for example, is this thing growing? No, it's the exact same, doesn't grow. So the bigger the fund gets, the much slower you're going to see that month over month change. And and there's only so many Canadian dollars to go around, so I don't think that should come as a surprise that a lot of these bigger funds just aren't growing like that. But the smaller funds like ZW and newer, right, you're seeing bigger jumps like 20%, 10%, 14%, 5%, 66% year to date. ZWT, technology related. I know people are going to love that. Right, it has an AUM that is just primed for jumping, 5, 10, 15% every single month. And you can see that here, 10%, smaller month, 10%, 13%, 9%. So the smaller the fund is, it has just more ability to grow its AUM over time. But I would say probably overall, there's not really, is there a fund in here that looks like the AUM is suffering per se? Even its most, let's see here, even its most lackluster AUMs that are falling, they're not falling by much. And I'm sure they'll still operate a fund even if it's at $80 million and it's only gone down 5% the whole year. I think that's still good enough for them to say, yeah, we're still gonna milk this thing no matter what. So anyway, that's the health of the Canadian bank, or I should say not Canadian bank, but that's what you can expect from BMO ETFs, and more specifically their CoveredCall ETFs. Hopefully you liked that small snippet from the CoveredCall ETF ALLSTAR tracker. There is a 2.5-hour video over on my Patreon full of all of June's content if you want to consume that all at once. And to head over to the Patreon, there'll be a link in the description below or the very first comment that you see. So if you like what you saw, as always, hit all the buttons of the like and subscribe variety, and I'll see you all in the next video.